Welcome to the Atomic Level, the show where we decode the matters of wealth, one insightful conversation at a time, with the rising stars in finance, business, and tech, so that you can grow and protect not only your net worth, but most importantly, your net happiness. I am Chris Snook. Today, I welcome Dr. Pippa Malmgren, who I have been chasing through the DMs for a couple of months and who finally saw it. And so, literally, in the last like 24, 36, 48 hours, somewhere in there, we went back and forth on email. And up until even 5 minutes ago, wasn't sure if we had connected on the right time. So we are super happy to have you here. The live stream will fill up. If you're listening to this on replay, get your notes out. Make sure you are doing all the things to trap this information. Dr. Pippa, welcome to the show. I look forward to getting to know you in real time.
Oh, I'm so psyched, and I'm really glad we're having this opportunity to do this, and I love this combination of ideas that you're pursuing is, how to build and preserve your financial wealth, but also your human wealth, which is that happiness quotient.
Yeah, and well, as we all have probably realized in one way, shape, or form, they say, money can't buy you happiness; it can rent it for a while, and I think that's very true.
Yeah,
and
yeah,
and
yeah.
and happiness is this interesting kind of multifaceted dynamic. So just having it in the net region of my awareness helps me, and so hopefully it helps others. And again, I look to try and find out what makes you happy, what also the work's about. And so we're going to start with that. So we're going to get into at whatever level you want to start. Some people start at their early days, some people start in university, wherever it is, but something that shaped your worldview, kind of where you came from, so we understand who we're listening to and what shaped her worldview. And then we'll get into kind of a lot of the things you're writing about, which I think are fascinating. You're obviously I think you're top 10 right now as of today. I can't remember last night I looked, you were at 11. You've been there since I've started. So if you're not subscribed, guys, do yourself a favor, click the button if you're on the app, or just do it as you're listening to this and pick your level, but do not avoid this opportunity. I think you're going to have 90 minutes of reasons why. So where did you come from and what shaped your worldview?
So I'm from Washington, DC. And, normally I'm in DC today, actually. Normally, nobody's really from DC. They come to work for the government for a little while. But my dad ended up being an advisor to Presidents Kennedy, Johnson, Nixon, Ford, and then was close with Carter and was quietly advising Reagan. So we just never left.
Mm,
And that had a huge influence on my way of thinking because my dad was always telling me the difference. He used to always say there's a huge gap between what the front page of the Washington Post says and what actually happened. And then he would tell me the difference because what I didn't understand in those days was that he was in the room. So he
right.
really knew, right? Because when you're a kid, you're like, I don't know what my dad does, but he did always have interesting stories. And my mom, who they met at Oxford, even though they're both American, but she had been studying Middle English, as in Chaucerian English. And it turned out that J.R.R. Tolkien and C.S. Lewis and a number of these people that we now know as the Inklings, that were a bit of a club at Oxford in the late 50s, they loved speaking in Middle English, Chaucerian English. So she got in because she spoke that language. And so I learned a lot about storytelling and, novels and narrative and art as a way of conveying truth and reality. And so between the two of them, I've ended up as an economist who specializes in the story rather than the numbers.
Mm. I have no idea. I'm still in my head trying to figure out, how did you say that? Tessarian English? I'm like,
Meaning Chaucer, right? Like
Okay.
Chaucer. Yeah,
Oh,
so when
Chaucer.
you
Oh,
think
Chaucer.
Chaucer, that's Chaucerian English. That means
Here.
Middle English. So it's kind of this strange medieval language that has
So it's not like syntax. It's different than that.
it's a language. It's a
Okay.
pre-English.
So so your dad was like in all these rooms where it happened. One of my favorite songs from Hamilton, which I always rewatch every July 4th. So he was in the room where it happened, the room where it happened, and you were kind of just scooping that up like a normal kid, just kind of going about your day because you didn't know any different. That was your kind of normal, was just
Yeah.
hearing these stories. And so that was early formative. when did kind of monetary, policy, you
Mhm.
talk about economics in plain English. That's kind of your tagline, which I love.
Yeah.
I think that's what actually was the thing that really drew me to invite you to the show a couple months back was like just that tagline because I am personally passionate about trying to distill the complexity of all these changes as this world of convergence into a token economy and everything that we've seen over the last 30 years converges into one. And you just have so many people that don't even understand how the current system works still, but that are hoping that S&P just keeps going up, right? And I think when I saw that, I was like, great, someone who is out there doing this at scale and in a meaningful way. I definitely want to have that conversation. How did you go from the access level that you didn't even know what you necessarily had, but it was your normal to like monetary, you know, sense making for folks? Like, what was that? That was a big gap
It's
between
a big gap. It's a big
because you
gap.
you you kind of were in the elite, and whether not in a mindset, but like you were in the inner circle that no one gets. So you
Yeah.
didn't have to kind of make that decision. And what were the things that kind of led you to that? What were some of the paths that made you care?
Yeah, it's so interesting when you put it this way. So, it took me a long time to understand that I was a daughter of a kind of high priest of the economics profession, and that it was a priesthood. Like, it took me a long time to understand that it's not an open field. It's literally you have to go through certain hoops to even get in the room. And a lot of those hoops, some of them are academic, right? So you have to get the master's degree and the PhD, and I did that. I got, but I went a different road. I wasn't trying to do monetary policy or money. I was just trying to understand the big world. And I ended up at the London School of Economics. I did my PhD on political economy. So it was this thing that you couldn't even study in the United States at that time because political economy was considered communism, right? Like, unless it was capitalism, the minute you added in politics, then that was communism. So the only place you could study this was LSE. I managed to get in and loved because I always understood, again, from that early exposure that every economic policy decision has a political element to it, either as a force creating it or as a consequence. So I'm like, I don't even know how you separate these two. They're one thing. But intellectually, that's not where the United States was at the time. Now, political
Mm,
economy is a whole field. And I studied with the person who kind of invented it, which was Susan Strange,
mm,
who was a brilliant genius, and she wrote this book called Casino Capitalism. So she, like, completely took on this whole high priesthood establishment that was very, very committed to the idea that, every it's a very Adam Smith idea. If everybody just pursues their own self-interest, then everything works out and governments just get in the way, and so, so that was part of it, but then I thought, "I'm never gonna work in politics, like, I'm out, that's not my world. My dad did that, but that's not me." So I went to work, for Bankers Trust in London. And when I went to try to get a job, it took a year to get a job in 1991. Nobody was hiring. I had not understood that the savings and loan crisis had just wiped out all of the banks. And they were
right,
like, we've just fired everybody with 5 years experience, and you're showing up with a PhD, and at the time I was 29, and they were like, "You should be a managing director by now. Like, we're gonna have to hire you as a junior associate. That this is so not gonna work. You just don't belong here." And I really fought, and I finally got in. And it was only after getting into that financial world, because I kind of felt like money was like the the blood of the global economic system, and people I knew from my upbringing, they knew trade, but they didn't
mm,
know money. So I thought, okay, I'm going to go learn money. And I never thought I'd ever go back into the political world. I thought, I'm done. I've gone a different road. Kids always want to do something different from their parents, right?
right.
And so what I quickly discovered was that and the way I think about this is I literally spoke two languages that were very important. Klingon, and Federation. And what I mean is, I spoke Federation because of my dad. So my ability to speak in the language of policymakers, I knew the vocabulary, I knew the subjects, I knew. But when you sit with traders, and at that time at Bankers Trust, I had as my clients um, the founder of Tiger Asset Management. Remember Julian Robertson, who was a
Oh yeah,
legend.
yeah, yeah.
I had, some of the biggest hedge fund names today
And
were,
were you on the research side, the analyst side? What were you doing at Bankers Trust? What was the
well,
role?
originally it started, I was on the asset management side, and I ended up running the asset management business for Bankers Trust in Asia. So I had everything other than, um, well, basically I had everything from cash management all the way to proprietary sort of pre-hedge fund stuff.
Okay.
Um, and that was an amazing experience, but fundamentally, it was a sales job more than anything. It was a client relationship management job. But after that, I shifted and I got a job as a currency strategist. So I started in FX. And
And
in
this is in the mid '90s, so and especially in Asia. So, I mean, for
oh,
those who understand the history of markets, like, you couldn't have gone into a more volatile
I
learning
mean,
while you
Asian financial crisis, this was an incredible time. And the head of the trading floor in London, I basically was like, look, now I understand these financial products, but I have no idea why dollar yen goes up or down. I don't know why the S&P goes up or down. Like, I need to get on the trading floor and learn the lifeblood of the markets. So I got offered this job as a currency strategist. And I remember pretty much the first week, um, everybody on the desk said, Fibonacci levels. You need to know about Fibonacci levels. And they showed me these charts, and they were trading against these, levels. And I was like, wait, are you telling me that this whole thing is so mechanized that it's based on a methodology invented by a medieval monk? Right? Like, what? And that didn't make any sense to me coming from Washington, where I knew about all these political deals. Da, 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 da. And then one of the guys from Asia said to me, oh, I don't use Fibonacci levels. I use this. And he points to a lunar calendar. I was like, you are kidding me. You are trading fixed income and FX based on moon cycles. He said, you know what? I'm not based on moon cycles, but everyone in Asia trades it based on moon cycles. So that's why I got to know what's happening in the moon cycles. So that's when I started to realize, oh my gosh, okay, none of this works the way I thought it did.
Hmm.
And I think these guys are missing a trick because they don't understand political world that I do know. And so I started to explain, okay, here's what's happening in the political policy world, geopolitics, strategic security that's going to affect the price of dollar yen or the Indonesian, rupee or whatever it was. And suddenly I realized, oh, I have an angle that they don't have. Then the clients loved having this sort of story aspect, not just the Fibonacci level or all the math.
Mhm.
See, everybody in that world, they focus on the numbers. So they're just doing what's the inflation forecast. And I remember one day sitting on the trading floor with the traders, and I'm trying to tell them what the Bankers Trust inflation forecast is. And they literally are looking at the screen and they can't even be bothered to turn their head to acknowledge that I'm there. Like, they're barely even listening to me because traders don't really care what the economist has to say.
Right.
And then in that moment, Bloomberg suddenly had a headline saying that the deputy minister in Japan at the Ministry of Finance, um, who is called Sakakibara, he said something that just they all jumped. They all went, "Oh my God, this is important." And I said, "I know him. I have his phone number, and he'll take my phone call." And suddenly they all turned to like, "Who are you? What?" And of course, I'd met him because the thing is, in various governments around the world, most people never leave. They just keep moving up in government. And I had met him years before on some other issue. And so we had a relationship. And I remember, again, my dad saying to me, when you meet people from foreign governments, never, never associate them only with their job title.
Hmm.
If they're, for example, anybody assigned to the embassy in Washington, D.C., you already know they're going to have a spectacular career. They have been chosen out of everyone to be in the most important city in the world. So stay in touch with everybody. And when you when they leave to do another job, meet their successor. And
Yeah.
then you'll build a network through this process, which I did. So anyway, so we got on the phone with Sakakibara, who became a legend. He was known as Mr. Yen. I mean, we didn't know at that time that he was going to be such a formidable character in the FX markets. But anyway, and he explained it's a misquote. It wasn't what we said. It was something else. So we made a lot of money that day because we had an insight. Those days are long gone. But what's important is I began to realize that policymakers can't talk to traders very well, or vice versa, because they speak two different languages. And the policymakers are very careful not to give away inside information because that would be a career ending event for them. Traders are totally focused on getting inside information.
Right.
And so what happens after a meeting, and I remember I had this happen once with Julian Robertson, where he called up and he said, Pippa, I want to see the Japanese finance minister on Tuesday. I was like, it was like Thursday at this point. And I'm like, God, these people, their schedule is booked months in advance. Like, there's just no way we're just going to get in there. But traders are like, I'm the most important person. Of course, he's going to see me. So anyway, and then we'd get in there, and then Julian would ask a question that would be literally, when are you going to raise interest rates? And the policymaker is looking at me like, how could you bring this person into my office to confront me with a question that it is illegal for me to answer? So being a diplomat and a diplomat's daughter, I would have to step in and say, oh, well, what he means is, and then I would take his Julian's question and turn it into policy speak and give him lots of
So,
avenues.
what is the example? I want to hear what the policy speak version of that is.
Oh gosh, there's so many versions of
I'm
it.
sure it depends on the person
It's
you're
so
translating for, right? Because
yeah.
you know them at a level too, where you kind of know where their gray area, their black and white is. Like, so I'm assuming it's like any other translation. You're personalizing it.
Yeah, well, and they would be making always the high priests of economics, who are the policymakers, they always will make reference to models. And these models are obscure and difficult to understand. And they will say, well, when in our analysis of this model, we see the following thing, which doesn't answer the question, what are you going to do with interest rates? But it gives you a lot of hints. So then
Mhm.
the trader guy is looking at his watch going, I'm trying to get some answers here. So then I have to turn to him and say, the hints are this. Da, 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 da.
Right.
And sometimes I have to tell them after the meeting. So,
Right. I was going to say, sometimes you probably
protocol.
couldn't do that. Yeah. You probably couldn't do that right in front of it.
So
So,
in long story short, here's the key. I realized I am a translator interpreter between these two worlds. There's the high priests of the trader community, and they have genuine power. They move the markets. And then there's the high priests of the policy world who also do, but they're very different. And I just did so. This is how I got a reputation for being able to explain what's going on in the financial markets to policymakers in plain English, and
Mhm.
being able to explain to traders in their plain English what the heck is happening in the world of politics and geopolitics.
Gotcha. This is a really good intro setup. I want to ask one more clarifying question, and then I also want to earmark something that we're going to boil into related to these forces, because I think about these things as forces, right? And at various times, like if we look at the '90s, there were certain forces that market forces, for instance, or currency forces that had more disproportionate impact on what policymakers or traders did or didn't do than geopolitical ones. And now we've kind of moved into an area where you could argue the geopolitical forces might have more of a weighted average on the net outcome. But I want to get into that as we talk about your frameworks in a little bit. So let's finish up
Sure.
the background intro because I think this is good context for understanding how to listen to you, and through that lens I can see clearly why a trader wants to meet the policymaker, right? Like it's obvious. Like, are you raising interest rates or not? It's a super kind of binary hedge, right? Or edge.
Yeah.
What is the impetus that a policymaker wants to meet a trader like Julian? Is it because they know that if they do something, are they trying to also get a sense of if I do this, are you going to dump my whatever bonds, my this? Are they trying to hedge against their own impacts? Is that is obvious, or is there something else that they're looking for?
Bingo.
Okay.
They definitely, because think about it. If you are a senior person in the Ministry of Finance anywhere in Europe, anywhere in Asia, you've never been a trader. You've never been on a trading floor. And so you do not understand what motivates these people. What are they interested in? What words entice them or turn them off? You have no idea. So you're trying to manage this basically pool of sharks, and you just don't even know how they operate. And also, they want the market to discount things. They don't want to surprise the market. The markets are can be very turbulent. The idea that you create turbulence is a problem because you're going to get hauled in by the prime minister saying, "Why did you do that? Why did you surprise everybody?" So they need to meet with the markets to kind of gently let everybody know,
Right, they wanna price it in a gradual sense, whatever the it is.
yeah, whatever the it is. And at the time, FX markets were hugely powerful. They were the place where the discounting of geopolitics happened first. It didn't happen in equity markets, it happened in FX markets. So, and those pools of capital are so vast.
Do you think that shifted now? Is it happening in equities first now and FX later, or what do you think the current
Um,
state of it is?
that's a good question. I think FX markets are still very, very sensitive. I think equities have been remarkably resilient and kind of like whatever about geopolitics until it smacks them between the eyes. And then they're like, whoa, wait. But even then they go, actually, but the economic imperative is so powerful that, yeah, the price will come back. Right. So they adjust a little more violently and rarely. I'd put it that way. Bond markets stopped responding to geopolitics a while ago, and that's been super interesting. We used to talk in the political world about the bond market being the vigilantes that
Right.
ride the policymakers if they did anything that looked like it might create inflation. Remember who was it? Uh, oh, what's his name? I'm just flaking. One of Bill Clinton's policy advisors said, "When I grow up, I want to be the bond market," right? Because it was so powerful at that time. But a whole bunch of things happened that then started to diminish the ability of the bond market to respond so violently and act as a brake on the politicians.
Do you think in a fiscally so I'm gonna make certain assumptions, and if they're not assumptions that you, believe hold, then you can correct them,
Sure.
because 'cause I'm not certain. If we live in a fiscally dominant world right now, where essentially we've moved from monetary policy dominance like the Fed, right, to more of a Fed being reactive or in kind of a rock and a hard place situation where spending because of both demographic forces and all the other things, right? Where spending is basically the only way. There is a fiscally dominant train that never stops, like as Lynn Alden would say.
Yeah.
Um, if that's true, because maybe you don't think it's true, and maybe you have an argument against it. But if that is true, does the bond market is it the tail of the dog? Where does it sit today versus those vigilante days that you was
Yeah. Well, a number of things happened along the way that I think are important. For example, the regulatory guidance that started to happen after the financial crisis, after the global financial crisis. So I've been arguing for a while that the bond market isn't the best indicator of inflation expectations anymore. Now, that is practically heresy to say that because, of course, that's all it does. But once governments everywhere started to tell the big institutional fund managers, you must hold more treasuries or more gilts or more government bonds because that would be safer. And if you don't, parentheses, you'll have like 20 audits landing on you in the next week, right? So it's a form of financial suppression,
Mm.
and it was felt it was needed at the time because these guys would have all sold all the bonds given the amount of capital that got injected in the global financial crisis. So it was a control mechanism, but to me, it's like snapping the antenna off so it can't respond to signals, right? It's no longer able to tell you what is the market's opinion of inflation. It's telling you their opinion of audits, which is they don't want to have one. So that makes the bond market much easier to manage from a policymaker's perspective and less, uh, you can't be a vigilante easily in that environment because you're going to get shut down.
So let's go back to go forward. So you're a banker's trust. We got a great backstory on kind of how you become this unique translator between those whose primary, and I think this would be more obvious than it is, and that's based on ignorance. I didn't walk in the same rooms as you did in that regard. But to me it seems like if I'm a trader, I go, well, what the policymaker cares about is staying in power. And if I'm a policymaker, go what the trader cares about is zero sum game, making money. And why is it harder to think about than that as far as a base motivation? Maybe there's a lot more nuance to it, but all that aside, you kind of walk through that. You found out very quickly you were like this interesting person who could go from Klingon to Federation. You could translate between these two people that were both walking on eggshells trying to get what they want, but not like lean in or be put in jail. And so they're both trying to avoid that. And you're this kind of, soothsayer that's kind of navigating between both publicly and then also back channeling when needed to try and make things happen. Where did you go from Beggars Trust? What was kind of the next kind of 20 years? Where were you sitting when the GFC went down?
Yeah.
I want to get into some of the pieces. And if you're in my audience, I see a lot of names I don't recognize. You're in Pippa's audience already. Upgrade if you're not upgraded. That's me telling you, not her telling you. If you're in my audience, you definitely need to subscribe. There's a piece I read on Greenspan recently. I don't want to jump right to that, but it just had me thinking about your lens on this forward guidance kind of
Yeah.
trend. And I think that's really interesting to unpack. Um, you wrote a 3-part series on it. People can read it, but I kind of want to just talk through it as it relates to your
Mm.
journey because you started mentioning that in that last breath,
Yeah. So
right?
they're all connected. So what happened was I started getting phone calls from, and I know this sounds strange, and I still get these phone calls to this day. I started getting phone calls from people who woke up one morning and realized they might become the head of state. They literally, they're politicians who suddenly go,
I
I
might
might
win.
I might be president of the United States. So one of them was George W. Bush when he was the governor of Texas, and his sort of chief economic advisor was Larry Lindsay. Larry Lindsay knew my work. We used to always like confer, oh, I was in Paris. What did you hear? This is what I think they're doing. We were just comparing notes on what we saw in the world. And then Larry's like, I think he's gonna run, and I think he needs to hear what you have to say. Would you fly to Austin and brief him? And I'm like, "Yeah, definitely." Because again, because I grew up in a family where my dad served Republican and Democrat presidents,
Right.
my view was, of course, you serve whoever asks. In fact, Nixon pulled my dad into his office in the first week that Nixon, had won the presidency, and he says, I hear you're smart and everybody says that I should hire you. And so all I need to know is, are you a Republican or a Democrat? My father said, yes. Nixon burst out laughing. He's like, "What do you mean?" He said, "Listen, I'm here to serve. I'm here to serve the country. So there are
Wouldn't
ways."
it be a great attitude today?
Yeah,
Yes,
and
it
wouldn't
is
that be
really.
great now? So that's what I grew up with. So I was like, "Of course, I will brief whoever." And at one point, I did get an invitation to brief Senator Clinton. It never happened, but I said yes to that too at the time because you just brief whoever. You want all these policymakers to be as best informed as they possibly can be. So boom. Anyway, then he won. So he offered me the role of being on the National Economic Council and being in charge of financial markets. Now, in the interim, in between, Deutsche Bank had just acquired Bankers Trust. And of course, they literally fired everybody except a few of us. And the Deutsche Bank guys said, "Well, the clients, they actually like you." And I'm like, "No, they don't. Please fire me and give me the huge check that you're giving everyone else." And they were like, "No, no, no.
Right, right,
Our
right.
clients really like this story, geopolitics." I was like, "Oh my God. Okay, fine." So, but of course, the Deutsche guys were super quants, and I'm literally the antithesis of the super quant. So it wasn't very comfortable. And UBS made me an offer. And I said to them, "Look, guys, I'm now advising a potential president of the United States." And his chances were so low at that time. Like, I was like, "It's just very unlikely this is going to happen, but this is what I'm doing." And they said, "We're good. Come work with us. And if it happens, we'll let you go. No problem." And I was like, okay, that sounds pretty good." So that's how I ended up at UBS as the deputy head of global strategy. Not so I had everything except equities. So I had fixed income, commodities, and currency. It was a fantastic situation. And after I left the White House, uh, they were wonderful, and I worked for them as an advisor for many years after that. So I had a really long relationship with UBS and learned a lot about the world from working with a European bank. Anyway, bottom line is that I got into the White House and we had two crises happen one after another. And one was the dot-com bubble had burst, and we had 7 of the 9 largest bankruptcies in American history in a single year. So that was Enron, Tyco,
Yeah, and we
WorldCom.
had those because we had massive accounting fraud, so we lost the Big 4 and the trust in the Big 4 at that same
Also,
time.
also, but also, all the spending, a bit like today's spending on data centers and AI, there had been this huge spend on infrastructure that suddenly went bust. So the
Right.
whole market had to adjust to that. So I worked on that, and then 9/11. So it was an incredible time and that gave me the chance to also work very closely with the with Chairman Greenspan. So they used to have this thing, well, they still do. It's called the plus one. And the plus one is where it's whatever the big issue is, you will have the Treasury Secretary, the head of the Fed, the economic advisor to the president, and whoever else needs to be in the room, plus one. So each one of them got to bring one person with them. So Greenspan always brought Roger Ferguson, who's very brilliant, and I was the plus one for a lot of that for Larry Lindsay. So that gave me the chance to really work up close with Greenspan, who had worked with my dad back in the Ford administration, and they went way, way, way back. They knew each other well for many, many decades. And so I learned a lot about how does Greenspan operate. And I met Paul Volcker, and I'd seen him in operation, not in my official capacity then, but in earlier years. I'd been in the room with Volcker, and Dad had told me these stories about the way Volcker controls the outcome is he smokes really terrible cigars. And if he doesn't like how a meeting is going, he will start smoking this appalling cigar and he just literally smoke the room out. And also, he loves to hold meetings at the very end of the day when everybody else is supposed to be going home for dinner and will get in trouble with their spouses if they don't get home for dinner in time. And that way, he just cut through all the noise. And then I watched Greenspan, and this is what I wrote about in my article, is we think forward guidance is a recent thing because it got sort of,
Unpack for the layperson or for someone, just unpack what forward guidance is,
yeah. So
like in a really plain speak kind of way,
yeah,
and then
yeah,
go right into it. Yeah.
totally. So it's the idea that the central bank is going to pretty much tell you what's going to happen before they do it. They're just
Right.
gonna they might not tell you all at once, but they're gonna
We're gonna
hold your
do three rate
hand.
cuts. We're gonna do three rate cuts in 2027 or
They're
whatever. That's forward guidance.
gonna get a rough idea that it's going up or going down, and it's gonna happen slowly or quickly, so that again, the market then adjusts
Right.
before the event, and the event is actually the confirmation. So
Right.
then
So phraseology would be higher for longer is what we would
is
expect. And that's like a very nice way of saying, yeah, we're not doing anything and you can right.
right. And this what's really important, back to your original question about why do policymakers do this, markets would then go up on the announcement, even if the announcement was for a higher interest rate, because it confirmed the certainty.
Hmm.
So they love that. Then every time you said anything, the markets went up. So now you're a hero. And Greenspan especially loved that. I think he always had a lifelong sort of rivalry with Wall Street. Even though he worked on Wall Street, he served Wall Street, but there's still a kind of rivalry between the chief executive of Citigroup or Citibank later and the chairman of the Fed. Like, who's the more powerful guy in the room, kind of thing. And Greenspan liked being in the position of having the upper hand, right? He did the monetary policy equivalent of a Trump handshake,
Right.
right? Where everybody knew who was really in charge. And Greenspan did this control of outcomes like Volcker did, but in a different way. He didn't do the smoking cigars, and by then it was illegal to smoke inside government buildings, so that option disappeared. But instead, he would have quiet lunches with everybody,
Hmm.
um, and he would suss out your opinion. And if he felt that your opinion and his diverged, he would basically quell your capacity to deliver that opinion before the meeting happened. He would undercut it through models, create a conversation amongst the high priests of the Fed about why that's not a reasonable point of view. So basically, there was a consensus before the meeting began. And that was very powerful. So, and also he would hold meetings in a very specific way. And I watched this over and over. He would definitely allow everyone else to speak first. So then you would hear everybody's positions, which gave him the opportunity to literally shoot down anything that he didn't like or build up anything that he did. So you had to be very careful, because if you went, well, I think blah, 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 and then he would just whack you. And you only had to be whacked once by Greenspan and you were gun shy after that, right? People were very careful. Also, he had an incredible not mind for numbers. His capacity to calculate on the fly was mind blowing. And he also could carry a number down to 5 or 6 decimal points. So, a politician might say, well, 63% of, all computer sales in my district happen on credit cards versus cash, for example. And Greenspan would weigh in and say 63.47845, actually. And so that made everybody afraid to ever quote a number, because he
Right.
would whack you if you were not totally correct. Also, he had better intelligence than everybody else for a wide range of reasons. And so you might say that, and he would say, actually, and that is not what has happened in your state. What you
Yeah,
have,
and by just and just by extending the decimals, the power, the kind of power frame that is implying that you're wrong,
yes,
even though you just were rounding up for
yes,
simplicity. So the implication is you're wrong
yep,
unless I want you to be right.
right.
And
And
you don't
that's
know which one that is yet. So just sit down and,
right.
guess at it while I keep listening and you don't know what I'm going to say next, right? Like the
Yes,
power frame is real. I
yep,
want you to weave this in. So here's what I'm hearing in this interesting kind of purview that you've had. The quant side, which you said when you were talking about UBSs, which were kind of coming back in and weaving around back to that like time period, um, is very deterministic, right? So when you think about trading, if you were to really think about it, what is the behavior driver? The behavior driver is deterministic values, right? Math is deterministic.
Yeah.
Um, Human behavior, which you could argue is politics, policy making, getting elected, vote getting, vote suppression, is very emotional, non-deterministic. It is very opposite.
Totally. It's the opposite. Because
And
nobody buys public policy based on numbers. Numbers do not sell it. You have to all public policy is sold on emotion.
And so I wonder, and again, I don't want to lead it too much. I want you to kind of, what I'm hearing is that you've kind of done this dance, and then you were the translator in between to kind of know when to press on the deterministic versus the behavioral or the human emotional kind of side of the piece in that translation. And that's kind of the dance that you kind of uniquely did for whoever you did it for. But that's the dance that we're in. When I think of Greenspan, again, I'm fascinated to hear these stories about how brilliant he was. I'm not questioning that at all. When I think of him, it was early in my career. I just think of a very monotone, blah 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 blah
Yeah.
blah. Right, like the meetings were just so droned out. Like even when you wanted to listen,
You
work.
couldn't. You
It was work to listen to
And
that
it
meeting.
was cultivated. That
And
was
I know,
deliberate. That was
oh, of course.
deliberate.
So in my mind, I'm going, he's doing that on purpose. But
Yeah.
the reason why I say that is because when you drop those numbers 4, 5, 6, 7, 8 as the decimal, you're almost using a deterministic flag to suppress the emotion and the ability of the human to pay attention so that you can do whatever the hell you want. But you're using numbers to justify it. You're not using numbers because it's selling it. You're using it because it suppresses the emotional side.
Yes. So one thing my dad again told me, because when I got to London School of Economics, first I was afraid because I'm not strong on math. I'm not fundamentally quantitative in the way I think. Like, and people are like, how can you be an economist and not be those things? And the answer is because the economics profession chose to make it a quantified subject, but it's not. It's about human behavior. And humans behave differently, even given the same circumstances, can behave very differently. And so, but it was like a battle that the quants won in the economics profession. They said, if you want to be an economist, you have to be able to do these very complex formulas. So I said to my dad, I don't think I could be an economist because I can't do these incredibly complex formulas. And he said, let me explain that the reason this has happened is it's very deliberately designed to keep the politicians out of the conversation. It's
Mm.
designed to confuse the members of Congress. It is because they are too difficult to negotiate with. So an easier way is just hit them with a whole bunch of formulas and then they blank and they like buy
So
whatever
that's
you say.
That's interesting.
And
It
I
makes
said,
sense. Is the weapon there? Is the weapon there because what they care about is the number they do know inside and out, which is vote count. And so if you hit them with this blunt instrument that is so complex they can't understand it, then you have them and they're going, okay, what does that mean for me? And so then your power move is to basically say, well, in your district, what it means is if you don't want to swing red or swing blue or have the independents show, not show up or whatever, show up in a drove you can't count, then you need to do X because if this happens, you're going to lose thousands of jobs. Or if this happens, you're going to see this go to the price of gas in your neighborhood. And they don't have any way to know if you're telling the truth.
then none, zero, zero. So in a way, what I did is back to your earlier point. I got in the room. I'm the president's advisor in the White House. I'm on the National Economic Council. I'm suddenly like a high priest of this profession. And yet I understand what they're saying. And I'm like, guys, you are not telling the public what they need to know, especially once the global financial crisis happened. And I ended up writing a book called Signals, where I explained kind of what I saw as the actual situation, which was The policymakers are saying, remember the meeting that happened? There was one day when
Hmm.
the global financial crisis was underway, and Ben Bernanke and Alan Greenspan held a closed door session with members of Congress. And they basically said, and I'm not even sure this is a paraphrase, but they basically said, if you don't approve this legislation that's larger than a wartime budget, we will not have an economy tomorrow.
Right.
That's what they said. Now, everyone in that room goes pale. I have friends who were in that room and they said everybody blanched because when those two powerful minds tell you there's no economy tomorrow,
Yeah.
I mean,
Game is over.
game over. So, of course, everyone said yes. Now, I'm not saying they were wrong, but I am saying there are consequences to that decision. So I was like, okay, we know we're going to have inflation. There's just no way around this. You can't do an injection of capital larger than a wartime budget and not have inflation. And inflation, I want to spend a minute on this because it's really important. When you have a debt problem that's so vast that it cannot be paid down, the human beings in your economy cannot earn that much, no matter how hard they work, then you're in a default situation. So, what are your options? Option one is you say, we'll never pay it back. That's what some emerging markets have done over the years. It's ugly. It's very hard to recover from. It's not the American way. So, we don't do that. Option two is you say, oh, I'll definitely pay you back, but it's going to be a little bit later and a little bit less. That's the Greek style default. And certain countries can do it and survive it. They actually come out better at the other end. But that's not the way the US operates. So we didn't have that option. Option three is you default on your own citizens and you say, you know, all those promises that I made you, like the potholes would be filled and you could retire at 65. Well, now the potholes are not going to get filled and you're not going to retire till you're like 92. So that's a default on the citizens that allows you to, make up the loss, but you'll get thrown out of office. So option four is where everybody always goes, which is inflation. That's the decision they made. When I actually talked to the policymakers at that time, they were like, "Oh, we did not choose inflation. Of course, Pippa, what are you saying?" And I said, but guys, obviously, this is what is going to happen. And I got into huge arguments with Nobel Prize winners, with board members of central banks. It's all on my X feed at the time. And they were like, we have total control. This temporary injection of capital, we'll be able to turn it down and take it back later. So there's no risk of inflation. It's like a bit of spilled milk, and we'll just clean it up when the time comes. And I was like, you guys are going to have no chance of pulling this much money back out of the market because you'll be hated, like, and you won't be able to withstand the public pressure. Anyway, I argued in my book, that's just the deal. So this was an example of putting into plain English, this
Hmm.
is what they're doing. And naturally, that made me not so popular with policymakers, although many of them were like, yeah, we see it, we know. But it made me really more popular with the general public who are like, "Oh, this is what's happened." And then
Well, so let me plain speak some of the things that I'm interested in how you react to this because this is not intended to debate what you just said.
sure,
I think you did a great job explaining that in plain speak. You know, let me give you my version of it, and then let's just react to it because I think it is important whether it's policymakers or the general populace, which is 99% of the world, right? Is
yeah,
a couple things. One, we live in a system, at least for the last 113 years since the Federal Reserve Act, right? We live in a system where money, the US dollar, is nothing more than tokenized debt. Now it's not a digital token, but it's essentially it's tokenized debt. It is money born into existence first as debt. So by paying off the national debt, we would erase the money supply as we know it. Doesn't mean we couldn't create a new one, but we would have to create a completely new money supply. It's been done before. So for anyone who's wondering, when they say the game was over, what they didn't tell you is the new game could begin. They just said the game that you're used to, that you don't understand, that you're afraid to lose because I'm not telling you what the other game is, that game ends tomorrow if you don't vote. So they all voted.
yeah,
They didn't say, hey, guess what? We could create a new monetary system overnight as well because all this is made up out of thin air. They
right,
just said it's over.
yes,
And so the default on your promises is everything that everybody thinks is real Tomorrow will not be real anymore. And I won't tell you what the next real thing could be because that won't get you to do what I want today. So that's the plain speak. That's Chris's take on what they did. Right or wrong, not the point. Can't live backwards. But that's what happened in 2008 in that room, right? Is they didn't give him the whole story. They told him the game is over and they made the game absolute. And that then created essentially sovereign bonds in the US Treasury as the only source of actual flight safety
Yes.
money in the planet. Now we no longer had the gold standard. We no longer had any other system other than belief in a 1 point something trillion dollar defense spend to enforce our collections on the monetized debt around the world priced in dollars
Mm.
and the oil barrels priced in dollars. We were backing it by guns and we were backing it by belief.
Yes.
And in order to keep that belief going, to your point, they said, you need to vote yes on TARP or whatever it was. And so they did. Now you extrapolate that out 15, 20 years later, what's happened? Well, inflation in assets has happened. And so the story held good because if you were in markets and
Yes.
you had free money access and you took risk in equities, well, then S&P is up exponential. All these things are up. And so rich got richer. People in index funds and ETFs and all these other mechanisms kind of flourished.
Yes.
And so now we have a passive,
House prices went up
everything went up if you owned.
if you had
Ev-
assets.
If you didn't own, everything got worse.
Right.
And so, two stories of inflation. Inflation's good if you owned assets. Inflation sucks if you are trying to live
Right.
and work. And so, we have this pitchfork kind of
Yes.
building, right? Like this have and have nots getting wider and wider, which has happened throughout history. And the design of the system itself is inflationary because you have to have something to collateralize the debt you're minting into existence to call it money and currency.
Mm.
And that something is the citizens' labor, right? And so anyway, I say that because that's the plain speak thing that no politician, very few are understood. So again, they don't know what they don't know. And they think this is the only game that exists. And right now it is the only game we have at scale.
Right.
So there's truth to that statement of it ends tomorrow and it's not going to be pretty. That would have been true. It wouldn't have been pretty,
Right.
but it's like we let the 100-pound tumor in a 200-pound man become a 600-pound tumor in an 800-pound man, and we still haven't reconciled anything. So
Yeah.
what happens from here? At
Yes.
what point does the game truly run out of gas, or does it not? And in this human behavior, what is your let's move into your frameworks now. What does it tell you about where the levers move now?
Yeah.
Who has the power to wag the dog now that didn't have it 10 years ago?
Mm. Well, so first we have to understand money is permanently changing. So we think of all these instruments as fixed, like
Mhm.
US treasuries. We don't understand they're all made up out of thin air. They literally are a creation that is designed to solve a problem. And I really learned this once when I was in conversation with a guy called Stanislaus Yasukovich.
I
You know
know
who I
that
mean?
I know that name for some
He
reason.
he was the father of the Eurobond market.
Okay, okay. I was gonna say I know that name. I don't know why I know that name. Okay,
Yeah.
I know that.
And so here's the story that tells us everything. So in 1962, John F. Kennedy thought he had a debt problem, right? Little did he
Yeah.
know how big this could become, but he was freaking out about the debt problem. And so he wanted to find new ways to generate revenue. And he said, okay, let's do a tax on the sale of all corporate bonds. Any corporate bond, we get a little piece of it. Stanislaus Yastakovich and his mates in London were all in their like early mid 20s. And they all look at each other and go, what if we issued corporate bonds for American companies in London so the tax won't apply here? And they all went, yeah, we could do that. So imagine, Procter and Gamble suddenly says, we're not going to issue this debt in the US market because of the tax, but we'll issue it in London. That was the birth of the Eurobond market, right? Which now is like trillions of dollars. It's literally, they just went, oh, it's a solution to a problem. Same thing with Brady bonds, for example. When the Mexican peso crisis happened, and there was a need to do a bailout, but it was hard to figure out how. They just said, let's make up a new financial instrument called a Brady bond. Special characteristics, useful for solving the problem. So this is the thing we should understand, and this is why it's important today that Kevin Warsh, my former deputy in the White House, is telling us that there's regime change at the Fed. And this does not mean we just swapped a Democrat for a Republican. What he is saying is we are about to radically transform the money system itself. And there's been lots of warning that this is coming, but people haven't believed it, in part because the previous administration said, we'll never let this happen. We won't go to digital rails. We won't go to Bitcoin. We won't go to stable coins. And we certainly won't go to crypto. And then the new president comes in and says, we're going to all of them. And so, boom, wait, what? Everybody's trying to figure out, and then should I do it, or will the next president reverse this? But what it is financial innovation. And financial innovation is a permanent feature of money. So the problem people have is they think they're playing, say, American football. And then the game changes and suddenly it's cricket. But they think it's a one-off moment. But this happens all the time. Money is a permanently changing game. And that's why we have to pay attention to it on a different level than, the people who understand today's game, they don't survive in tomorrow's game.
Yeah, and I think that's so, let's talk a little bit about your process for thinking and analyzing this and how you work through the things that you write.
Mm,
Because there's obviously, a thesis underneath all that. We've talked a lot about your influences and kind of your unique purview and talent to translate. But now let's get into some of the frameworks that people can, understand about how you think and measure it up against maybe filling some gaps in our own thinking when you think about where we go from here.
sure.
So we have demographic forces, right, of an aging population that essentially we're seeing lower activity entering the workforce than we are at the back end of the workforce, right? We're in that demographic shift. So we have that. We could argue that in a world that is a debt-based system, which is what we have and all we know right now at scale,
Yeah.
that liquidity matters more than anything, and your ability to refinance in a balanced way so that most of that is not on the front end, which is part of the problem today, right? The problem with the debt market today, in my opinion, and other people, we had Barry Knapp on a couple of days ago,
Oh, yeah.
talking about there's too much in the front end, not enough kind of in the mid and in the back end. And so you get this inability to refinance effectively, which
Mm,
puts pressure on your spending because now your interest payments are eating up more than your other things that are important: entitlements, roads, things like that, defense. So we know all that. So okay, so we have that force called too much debt and way too much on the front end, and liquidity drives all. Okay, so if we believe that, that's another force. Then we have technology.
mm.
We are not seeing a disruption in a vertical way this time. We are disrupting intelligence, which is a horizontal disruption that impacts all industries, regulated or not, at the
And
same time.
power and
And
energy
power,
and energy
all at the same
also,
time.
horizontal.
Right. So it's a complete horizontal disruption, which we've not had in society at the level that we've had it ever in human history, at least in recorded human history. And then we have just behavioral, economics and things that you know well about, which are humans evolve over millions of years and thousands of years. And we create this complexity and money and the technology and change in picoseconds. So naturally, what we think is going to happen probably won't happen at the same level in time that we think it will, because
Yeah,
humans are the lag. Like there is still this, like, I'm not going to do it. I'm behavior. I'm not going to, whatever it is. Like at some point, it's inevitable. Global Crossing, laying deep fiber, wasn't wrong,
right.
but they got fat early, and the capital structure underneath it was wrong.
Yeah,
Same thing could be argued for AI capex. It's inevitable, but we're seeing a lot of things that remind us of other times where it didn't quite go without a pause, right?
yeah.
How do you assess this now, and what are you writing about that you think is uniquely different for folks to make sure they're making the right moves in their portfolio and their life, and who do you serve? Like who's your target audience? Many of which are here listening live or on replay. Many are new from my side. So who are you trying to serve and why?
Yeah.
Give me all that in like the next little 10-minute vamp there or whatever.
Okay. Well, look, ever since I wrote that book, Signals, I I was asked by the publishers, who, by the way, at the time didn't want to publish my book because they said, you're unknown. We don't know if there's an audience. And they said, listen, nobody cares about economics. This is in um, 16, 2015, 2016. And I was like, everybody cares about economics. But in their minds, it was all like technical mathematical formulas. They hadn't seen somebody write about it in this plain English way. And I was like, but there is a way to tell the story and just to give the audience an understanding of what I mean. So I started to say to people, listen, when you go to the grocery store or any shop, at the checkout, there's like all the chocolate bars, right? And they're like, yeah, we all see all the chocolate bars. I said, have you noticed they're getting smaller? And they're like, yeah, I've really noticed my chocolate bars are getting smaller because everybody's super emotional about their chocolate bars. And I was like, so that is an early indicator that inflation is building in the system because the reason the company is doing that is the input costs are rising and they don't want to pass on a price hike because they're afraid that you'll buy the cheaper product. So the only thing is to make it smaller.
Cereal boxes are the same, right?
Cereal
16 to
boxes, the
14.8 ounces.
the aperture on toothpaste tubes started to get bigger because then you would use more faster.
Yeah.
Perfume
Oh
bottles.
my god, my favorite one is the chip. Like, whoever the idiot is that changed the ability to open up a bag of chips this way to where you have to rip it this way now, I wanna strangle
Yeah,
because, like, you cannot close it again. When you rip a chip bag now,
that's it. It's your
it's just gonna
son.
spill
Well,
everywhere.
and both cereal and chips, what started to happen was they would say it was like 12 ounces, but
Yeah.
that's because some of it was compressed air, and compressed air has a weight. And so actually the amount of cereal, the kids were noticing the amount in the box size stayed the same, but the cereal inside was going down. But it reaches a point where it's like absurd. There's one potato chip in the bag. Like you can't hide it after a while. And that's when the price hike is going to come. And that's when inflation will suddenly appear.
Right. And
So
then you
that
get the
was
same small one now, like the Milky Way bar is now the same shrink size, but now it's 2.69 instead of 69
exactly.
cents.
Exactly. So I said, look, this is that you don't have to wait for the Fed to tell you about inflation. You can see it coming yourself. So the publisher said to me, who's your audience? Same as you're asking. And I said, it's everybody. It's grandma. It's the teenager. It's my mom. It's literally everyone who has to get through the day and fill the fridge with food. And this notion that it could be a universal thing, that it wasn't for the equity market or for professional economists, it was literally just for regular people. So I've been trying to write for regular people ever since. And my experience is regular people are remarkably switched on and do notice these very powerful signals, which is why I called it. I made the idea that data tells you about what happened in the past. Signals are hints about the future that are not yet in the data. And we weren't at that time in any way focused on the signals because the high priests of economics didn't want us focused on the signals. They wanted us focused on the data that they wanted us to look at, which said there's no inflation and you don't have to worry your pretty little head about that. But the signals were telling a different story. And this is why I write on Substack to give people like, there's some signals here that we should be paying attention to. And I feel strongly because honestly, especially in the financial crisis, but I saw it as well in the Asian financial crisis and in the savings and loan crisis, which I personally experienced as a like high school kid because I had all my money in a bank that went bust. And at that
Mm.
time, it was like $200. But, to me, it was like a
Hey,
vast, vast sum of
I
money.
don't wanna lose $200 today, so,
Yeah, and the idea that it was gone one morning, I was like, "What?"
and because it's the trust that broke, right? It's like, "Wait a minute,
Well,
I thought the reason I put it there was so that I wouldn't lose it."
I thought banks were like solid things, right?
Right, right.
So because I learned this, I was like, I'm tired of seeing regular people getting thrown about by these forces in the world economy, which they could insulate themselves against. And they don't have to wait for some guy in a suit to tell them with an official title from the government we shouldn't be waiting for that. We should learn how to navigate these turbulent seas ourselves. We should become better sailors in this permanently fluid space we call the world economy. And I've been devoted to that idea ever since.
So individual sovereignty sounds like an important value that you write about, but that you also operate from. What are some of the ways you go from signals, which is what you deliver, that are super tactical, that anybody from a college kid to a stay-at-home mom to a working professional who makes a lot of money but is, high earner, what we call Henrys, right? High earners,
Yeah.
not rich yet, because they're
Yeah.
they're not necessarily investment geared, or a small business owner who just does the thing the honest way, the way they were like, the right thing. They just earn money, but now they're managing all this litigation risk and employee stuff and whatever the thing may be that was just part of it. And they've kind of accumulated this overhead of anxiety, if nothing else,
Yeah.
just to kind of keep the same net thing happening because of these underlying forces. What do they go from? Okay, now I'm aware of it. Okay, thanks for telling me the bar got smaller, the price is going up. Thank. What the hell do I do about it? Because I think that's where there's still a big disconnect. And I know you're building a bridge to that, but what is your version of like bridging me from the awareness of the signal so that I'm able to plan ahead for the future before it's data
Yeah.
and where I act, because I feel like
Yeah.
that's still a big gap.
So Warren Buffett really had something super wise to say on this. He said, the best hedge against inflation is investing in yourself. It is investing in your own capacity to generate more income because you've got more skill sets, more capabilities. And now that is moved to inflation may not be the issue today. In fact, I can argue that we're coming into a massively disinflationary period in history. We'll go into that. I think we're coming into a time when the cost of living is set to really collapse. But still, to make the leap from where we are now into that new world of abundance, which I see artificial intelligence and technological advancements suddenly providing us, you have to really invest in your own skill sets. And in fact, this week, I have spent hours this week starting to build AI agents, like creating my Obsidian vault. I like stuff. I'm like, it's giving me a headache because this is new. And I work in AI, right? Like I'm an
Yeah.
advisor to an AI venture builder studio, but to really do it for yourself
Yeah.
is another thing. And as I'm doing it, I'm like, "Oh my god, I can see so many businesses that I can now run without any staff." It's amazing. It's so freeing. It's
And with whatever nexus or jurisdiction makes sense. I do a lot of work on this, and for your awareness, just because I'd love to even have you join at one time. If you're ever free on Fridays, I do a AMA office hours called the Generative Advisor, focused on fiduciaries and people who are trying to do what you're doing, but that are in some form of professional advice, modernizing and rewiring their own
love it.
firm.
Yeah,
And we do those open office hours because, again, it's like there's just so many questions, just faster to learn from each other. We do audience
totally.
questions, and
Much better.
and so every Friday we do those
That's
on
cool.
my
I love that.
channel, and so that's another one we also do on Wednesdays at 10 a.m. Pacific. I always do one around asset and estate protection. Same thing, office hour. What does it look like in a world where we're having to deal with passcodes and someone's phone gets lost and now all their assets or all their passwords or all their stuff was in a 2FA I can't get. I didn't have that in a trust and will. I didn't have that. Like, in other words, what are the questions that people face, especially Gen Xers?
Yeah.
So for a quick plug, just because I would love to have you even, maybe be a guest whenever you can on some of
Yep.
those, or even throw some questions in that you'd like us to answer. And that goes for anybody listening. But like what you see there, I want to hear your disinflationary argument actually, because there's a lot of those out there. I think they confuse people because people go, I don't, but does that mean my house is going to go down? Right.
Yeah.
Because again, most people's biggest asset might be their house if they're
Yeah,
in
yeah, yeah.
food. And
Definitely.
so there's
Or
fear in even
terrified of
that. Like it goes, okay, yeah. So if my healthcare costs go down, that could be fun and exciting if AI helps that. But what if it doesn't? And what if it, I think there's just fear around disinflation as much as there is around hyperinflation.
Well, because it's change. And so you have to manage all these things. So, and I see we've got Omar in the live chat saying, wait, what? This is a leap. Like, what do you mean? When are we going to get this disinflation? So,
Timeline on that, please, he
yeah, yeah,
says.
I
Yeah.
want a timeline, like chopped up. So here's a few
Are
things.
you raising interest rates or not, Dr. Pepper? That's what we
Yeah,
want to know,
yeah,
right? Going back to the beginning. Are you raising them or not tomorrow?
exactly. So I have moved to Austin, Texas, for one big reason. It is the epicenter of technological innovation in the US, specifically in physical things. So
Hmm.
Silicon Valley still does amazing software, but in Austin, we see the entrepreneurs who are building cars and and EVs and nuclear power plants and making semiconductors, like physical things.
There's a 3D printed one of the coolest companies. It's like a 3D printed home builder out
Yeah,
there in Austin.
icon, icon.
Yeah, yeah,
They've
yeah.
done a whole 3D printed neighborhood at this
Right.
point.
That's the one I'm referencing. It's several years ago that I'm thinking about them, but yeah, there's some really cool built world stuff in Austin for sure. The built
Exactly. So
world, yeah.
there's something people are calling it the Shenzhen of America. And in addition, Mexico has replaced China as the most important emerging market. It is the most technologically advanced, it's the least expensive, and the supply chains between the US and Mexico, especially on automotive, but
Mhm.
additive manufacturing, are very deep. So now you have this super dynamic space. I think the most dynamic space in the entire world economy between the Mexican economy and the southwest of the United States. So I wanted to be in the middle of all that. And it's been amazing. I am blown away by what I see. So I'll give you an example or two. So when you say we're going to have nuclear energy again, first people think 3 Mile Island, Chernobyl, we're all going to die. So then you say, well, that's the old nuclear, but we have new nuclear that doesn't have the meltdown risk. It's a very different technology, pebble bed, using triso fuel, and that things people haven't heard of, but they're real. Now, in Austin, we have a company, very interesting. They've been in the news lately, this last couple of weeks. Why? Because the president of the United States basically went to all these nuclear technologists and said, I'm going to give you guys a deadline. The deadline is July 4th, 2026. It's the 250th anniversary of the United States. And I'm going to work with the governors in various states to create an environment where you can run as fast as you possibly can to get to supplying safe nuclear power. So you will see a lot of headlines about many of these small nuclear power companies hitting criticality in the last week and a half or so. And then some people say, oh, but it's only a small amount of energy. And you're like, yeah, because you don't want to crank the thing up to full blast on the first day. You want to go through a testing process. But the reality is, much of this is about the kind of nuclear technology that's been powering the US naval submarine fleet since the 50s. So it's not that we don't know how it works, it's that it was so classified before that they wouldn't let private sector technologists work on it. So now we're seeing companies that are creating what I call a star in a box, which is nuclear power in something that's like half the size of an automobile that can power 5,000 homes almost indefinitely. And you're like, once we have one of those really live, which is now imminent, then everyone's imagination could go, oh, this is like viable. This is going to replace. So it's just like the first time you ever saw a Waymo, right? The first time you see it, you're like, oh, this robotic cars are real. Before that, it was all hypothetical and all 50 years away. 50 years turns into 1 year. And that is what is happening. And this is important for investors because in the past, from the time you had an idea to the time you made it reality was pretty long. And in nuclear, that was $30 billion in 30 years until last year. And now one of these companies, and I won't name because of, the whole issue of naming specific firm, but one company created a small nuclear reactor with less than 300 engineers in less than 365 days. Boom. Okay. So now, like it used to be venture capital or seed capital first came in, and then they would go, you know, we'll take that mega risk. Then venture capital would come in, then it would have, real cash flows, and it would take like 10 years to get it to an IPO, or maybe at least 5. Now it's all compressed. So suddenly you're seeing companies you never heard of go public in minutes. Another example of this, I think, is actually, I don't have any inside information on any of these. Everything I'm saying is public information. So I can tell you, I'm talking about ultra.
You're also on the ground. I think the important thing is you're on the ground. You chose to locate yourself in Austin. So you're kind of in the triangle there between what we can call the technology innovation and then the legacy oil and gas, which is obviously and get all that world is maximized right now. So you're kind of in this interesting convergence of the new world, the old world from an energy standpoint. None of these bits that we talk about scaling at exponential value, which are all inevitable, none of these things happen without atoms underneath. So that's been a lot of the people's writing now. Those who read my stuff, or Charlie Garcia or you even, right, is like understanding the arbitrage between the atoms that are required to make these bits, right? And where the bottlenecks are there. What are the toll booth owners there as it relates to refining the rare earths or getting the power at scale when it's a 10 to 15-year build out to get to what we've already promised. Like, how do we do that? China's leading in one way, we're leading in another way. What is this decoupling?
Mm,
Without it being a black and white decoupling, because that's not going to happen either with Taiwan. We have Arizona. I lived there for 10 years. So to your point, like I kind of saw the fabs in
got it.
Arizona, saw the $32 billion. So you can go, well, if you were to bet on a region, you go, well, Arizona, strong case for jobs. Texas, strong case for jobs. Then you look at affordability and you go, yeah, but like again, capital structures like housing is, in a big retracement right now. Like apartment buildings are overbuilt, right? In a good way in Austin, but rents are like people are giving away 2 to 3 months
Yes.
to just fill a place.
If
And
you're
most
right.
people go, well, Austin's not affordable. It's like, well, in some ways it's not, but in other ways, it's very affordable right now because they let the free market kind of provide more supply.
Right.
Whereas you look at California, you still have this housing crisis, you have this job loss, you have other things, and you didn't let the free market kind of apply overbuilding or permitting. And so you still have a shortage.
Yes.
And so understanding some of these practical things is where houses go up, where they come down, where apartments go up, where they come down. These are all pieces of where talent moves.
Yes. So back to what is the game? So for my generation, the game everybody thought was buy a house. That is your pension fund. It will never
Mhm.
go down in value. And my generation is hanging on to this belief, even though demographics tell us there aren't enough people coming up behind to buy our houses, number one. Number two, the young people are not earning enough to pay the price that we think it's worth, but we don't want to face that. So we're like, let's just assume that the markets are going to go up enough that somebody is going to buy my house for the price that I think it's worth. Nobody is saying, is this assumption that my house is a savings mechanism correct? Or are there other places to put your capital that would make more sense? Could I make more money if I rented and use that capital to invest in some of these extraordinary new technologies? Should I be part of that? And then we have a big debate about whether SpaceX IPO was smart or not smart. But the reality is that these are the alternatives, right? It's not that it's a set in stone that your house will always be the best way to save capital. And frankly, when did we start conflating our place of residence with our finest, most valuable investment asset? Because there's a
2001, you know that, right?
I-
Because we had to, right? We had to move the money somewhere. I love what you said earlier so succinctly. You said money is constantly evolving.
constant.
That's what you said 20, 30 minutes ago. And people have said it different ways, but to think about that, the incentives drive everything, always have, always will. And when the dot-com bubble burst, regardless of all the different reasons why, the bottom line was we needed a new bucket,
Yeah,
right, to fill before it all evaporated. So we said, go out and own a home because that was the American dream. The American dream wasn't to get rich off my home. The
that's
American dream was to own.
own. It was to
That's
own
what
it,
it
live in
was.
it, and have the security. What you were buying was the certainty that you weren't going to not have a roof over your head.
Right. And now the American dream for a whole generation or 2 or 3 even, pragmatic Gen Xers think this way. I could care less if I own my home. I wanna live where I wanna live, and I wanna pay the least amount for it. And
Right,
and so I do. I live in my dream home, and I don't own it
right,
because owning it would cost me triple, and
right,
I'd have to call the guy when something breaks, and I just go, "Jeff, you gotta send a guy." And
right,
guess what? The utility of it is the same. I'd rather own something, and again, not making recommendations on what other people should do. I'd rather own Bitcoin, or I'd rather own some equity stocks, or I'd rather own something that I see value in appreciating, and I want the utility, and I want to spend as little money as possible out of pocket for the utility.
right.
And again, as that changes, I think that's what you're saying. People are starting to become more aware of their optionality around what is it that I want to own? What am
Yes,
I willing to lease?
yes,
And then when and why would I do a different move in that strategy? Because there's a time. And the one thing that I think you hit on earlier that you're doing with Obsidian with some of that work and why it's so important is the only thing you can own before you'll be leasing it back forever at a price that 5 companies will dictate is your intelligence.
yes,
And that is something that people are still not grokking yet. And when they really understand the attract and extract model of Silicon Valley as it's been applied, and they think about that through what's not in the frontier models yet, which is in your private business, in your brain, in that's not in there yet. Once that's in there, you're going to be leasing it back for $200 a month or $20 a month, or, oh, we're going to only make you have Fable if you pay the API cost. So you're going to be a have and have not below the line of access to the world's best information. That's going to create a wealth gap that has nothing to do with money. That is very, very dangerous for those who don't see it coming.
yes. So let's go back to the question you raised, which is the "what do I do?" question.
Yeah.
And that's related to a similar related question, which is what should I invest in? And throughout my entire life, it has been assumed that there is only one answer to that question. And I got it when I was a currency strategist. The question was, is dollar yen going to go up or down? Should I buy it or should I sell it? The problem is the answer is different for every individual. And people are like, wait, what do you mean? How can that be? So when I was at Bankers Trust, I didn't buy stocks because I realized my entire income was dependent on the stock market. If the stock market tanked, my bank was going to tank. The shares that I held in my bank were going to tank. So if I bought stocks, I was literally doubling up my
Yeah, but
risk.
you're overexposing to an asset class
I'm
you already
way
had. Right.
overexposed just by nature of the work that I'm doing.
I made the same mistake in startups, so I can relate.
You
I've been a
get it?
startup
Yeah.
guy for 25 years, and so all my investments were in private illiquid companies.
There
And
you
I'm
go.
like, why, when I had liquidity event, why did I go start more startups? Why didn't I just go sock it away in freaking bonds or and because you know what you know, right? But you can
Right.
overexpose in an
Right.
asset class
Yes. So
unintentionally.
I bought property and people are like, why are you buying property? And I was like, because it's a hedge
Mhm.
against my exposure. So when people ask me, what stock should I buy or what should I buy? What should I sell? My answer is tell me about what you have right now.
Right.
Because if you're already long all this stuff, either directly or indirectly, and most people don't know how they're indirectly long of things or
How would they know
indirectly.
that? Give us some practical questions. That's a great one. I want you to so if I'm listening to this, I go, how would I know? What's the question, Pippa? I can
Uh,
ask.
well, the question is, so for, let's say you work for a big tech company, then should you be investing in tech startups? Hmm, if you really, really know the technology and the people, because tech is not only about the technology, it's are
Right.
the people capable of executing what needs to be done. And You can have horrible situations come from brilliant technology and a team of people who get all greedy and can't execute the strategy. So if you're in that, maybe it would make more sense to own, I don't know, again, might it make more sense to go buy a really inexpensive property somewhere, build it up, get the tax break on flipping it in a year or two, and yes, it takes time and energy to do that, but do you have a little time and energy to do that? If the answer is yes, maybe that is the investment. So then you're not investing money as much as
So here's another one I think
that's
is
an
very
example.
common. So yeah, so let's think about another one. Let's just work this one out together because I think this is a good practical takeaway today, right? So let's say I just work. I'm a teacher. I'm a pensioner. I am passively invested through my retirement account, whatever that is, 401k, IRA, whatever the normal stuff is, right?
Yeah,
In a 60/40 model portfolio. That's me. I
right,
make my living. I live within my means or whatever, doing something that is not businessy. I'm not a startup techie person. I'm not an
right.
investor. I work, whatever it is, doctor, lawyer, teacher, doesn't matter. Where am I long there? We could argue you're indirectly long equities.
Yep,
You're indirectly long bonds, potentially.
yep. You're indirectly
So,
long your local politics. You're indirectly long federal politics in
right.
those situations.
And
So
by that meaning that they stay where they've been as far as your entitlements and
right,
what you can expect to receive
right.
in the way of subsidy or tax benefits or Social Security, Medicare. So
So
you're indirectly long if you're 60 plus, you're indirectly long the
yeah.
world that was.
So you are. So let's say a new politician comes into office and changes the rules on changes the tax rates. Okay, you're
Monzami comes into New York.
yeah,
Without it getting
there's a great
political. Somebody
example.
somebody comes in New York and goes, I'm going to give stuff away for free. Okay,
Right,
so how does that impact me if I'm indirectly long a free market or a non-socialistic thing? How does that indirectly affect me? Well,
right.
it
The
might mean
landlords in New York are finding out very quickly that they were exposed to politics without realizing it, right?
right.
So then they're now being told there's going to be rent caps and they're like freaking out because that means they can't pay the mortgage on the property, but they just hadn't factored that in. So let me go to a bigger level of this that I think is important for people to think about because let's take the person who's a teacher they're and they're at the end of their career, which in their view is 60, which given longevity, I hate to tell you, is not the end of your career because we're all
No.
living like 25 years
My
long.
father retired at 52 because they gave him an early buyout he couldn't refuse. And he sat on the couch and watched History Channel for 6 months after teaching for 30 years and being an administrator. And after 6 months, both
But
he and my mom looked at each other and was like, you better find something new to do.
yeah, yeah.
I got to go. At 60, that's the new 40,
It
basically.
is, it is.
So,
And the fastest growing component of the workforce in the United States is the over 55. Okay, so what are they doing? Well, now they don't have to do the old world, which is where you had one job with one job title, with one LinkedIn entry, with one W-2 and one paycheck. In fact, everybody's going, that's like the stupidest world. Like, who would work with all their risk concentrated in one entity? Now everybody's building portfolios where you have you're maybe consulting to your old organization. So that's one cash flow. Maybe there is a startup with a friend that you're working on. Maybe you're learning how to get these AI agents to execute business ideas on your behalf. So you're not even having to run it. You have employees. This is, by the way, very important because the human instinct is to say, oh my God, robotics, automation, AI means I'm going to be thrown out of a job. But actually, you can completely reframe this. And we see this in, for example, South Korea, Sweden, the countries that have the highest level of adoption of robotics, automation, and AI also have generated the largest numbers of job and the highest income. And people are like, wait, how is that possible? And that's because you have to start understanding those AI agents are your employees. It's
mhm.
not that they replace you, it's that you have moved up. You are literally promoted. And now you get the chance to direct these agents to go generate cash flows on your behalf. But it will only work if you do what Warren Buffett said and invest in yourself and go build your own relationship with AI, but get Claude working for you, which will probably force you to go spend some time with a grandchild somewhere and say, what the heck? How do I make a Claude agent? And they will be so thrilled to help you and do this. And this is the new world where you should be able to generate passive income, and people are like, "Wait, what is that?" And I say, "Look, there's an app on your phone that will literally pay you for every step you take." Now, it's not a lot. It'll buy you maybe a coffee in a month, but that's better than nothing. But it's proof point that you can get paid without having to like buy a thing or run a thing. And so this idea of what is passive income totally transformed by technology. So I'm literally, as I'm playing with AI, I'm like, I have like 5 businesses right now that I am constructing. None of them require human employees. All of them are looking pretty good. And I'm so excited because what I want is to be, it's not that I need them to make money and stuff. It's that I want to be able to show regular people it can be done. And this is
And
how
I think that's like when you think about where's a career opportunity or a job or whatever somebody's picture is, right? Because we all use different words. Where's an opportunity?
Mm,
The opportunity is recognizing that you have 70 some odd million baby boomers who aren't dead yet and don't want to be, that
yeah,
play pickleball, that do this stuff, and that are at the point in life where meaning matters more than money because they were fortunate enough to benefit from the last vestiges of what the old system did deliver.
yeah,
They're going to transfer 5 trillion a year in value for the next 22 years. That's happening whether the markets go up or down. That's just the
it is.
generation of transfer of wealth is
Right.
leaving one demographic's hand and going somewhere else to a confiscator, to a predator, to a grandchild. Who knows? Who cares?
Somebody,
That's
someone.
happening. So you have 22 years of that transfer, and you have this convergence happening where everything's getting disrupted and people are worried about the jobs of the future. And you have all these people who know nothing about what you just said. They don't know where to start. They don't know where to begin. And that's the opportunity because
Yeah,
the power of one is I could learn for myself. I could then recognize that 3 or 4 people in my men's group, my women's group, my coffee club, my whatever, my bike thing that I do on Saturdays have the same questions and concerns. Some of them are just going to want to put their head in the sand, retire, and not think about it.
yep,
Some of them are going to be seeking meaning. And again, that's the human side. So when we talked about the quant earlier, you're really focused on the human side. When you can think about the possibilities of humans shepherding each other through the unknown, there is no lack of opportunity ahead. There is
yeah,
actually a bigger opportunity and a need than ever, and value will follow that. And the net happiness part that I like to talk about or focus on is the fact of what gives you meaning, because for the first time, you can reinvent yourself without having to go 4-year college for 150 grand, right? Like you can literally just have a
totally,
conversation with an AI, pick your one,
totally.
and you can learn. You could just ask conversation. You can be stupid. You can be dumb. You can be ignorant, and you can go pursue a passion that you never would have done
Yes, because it's so
before.
much easier. This is the thing, like, until you've started to really play with AI, you don't understand. It's so empowering. So I'll give you an example. Claude Core. Anthropic announced this week that they're creating like the Peace Corps, they're creating a Claude Core. And the criteria is that you must be without a college degree. You must not have worked full time for until now. So they're aiming at young people pre-university, and they're going to hire 1,000 of them at 85 grand a piece plus medical health benefits, and they will move you to San Francisco for 1 year. And they're looking for people who are not coders and not tech people. What they want are nonprofit oriented people. They want people who have what I call heartware, which is this idea that we upgrade our hardware, we upgrade our software, but we also can upgrade our hardware, which is the business of considering what's important for the human operating system, which is caring for others. It is doing what makes your heart sing. And so anyway, why are they doing this? Because they realize AI has the capacity to solve problems at such an incredible scale. What is missing is not the technical capacity. What's missing is the people who understand what are the problems. What are the problems that the elderly face? What are the problems that the homeless face? And what could be done to help them? So, back to our housing example, something I'm certainly thinking about is, as a person entering my later years, instead of this idea of I have to, own a home, is actually I would like to support these modular home companies that can now construct beautiful buildings in a matter of days. And we can have like all these housing shortages, as you say, they're not needed anymore. And there's a new company that's just rolled out of Google, which is super interesting, called Anori, Anori. It's just in the last couple of weeks. They are a physical AI company. So what they're doing is, when you build a new apartment block or a new office building, the time it takes from the idea to the fundraising, to the planning permission, to the build, which then goes overtime, you're losing money. This is years, like many, many years. And they're like, we can just use AI to put all of those players on one platform and we can collapse the time and the cost by orders of magnitude. And suddenly you can build whole new communities in out of nothing. And the cost is falling all the time. These new modular homes, which I've seen in different parts of the world, they are beautiful. They're amazing. And culturally, you may be like, many people, especially my generation, they're like, oh, well, that's not a real home. They're not safe. And I'm like, the new 3D printed homes from Icon, the new modular housing is actually more hurricane resistant, more earthquake resistant than traditional homes. And they're like, wait, what? So it's like you've got to just break this mental mindset that is from the past and get with the future. I'd go even further. For older people, they're starting to think about, wait, what am I going to do when I get like really old and I need people to look after me? And that's expensive and that's hard. And a lot of divorces are happening because it's when you hit retirement that everybody goes, oh, wait, you were fine when you were off at work, but now you live here. So this is not working so well. What do we do with this epidemic of single older people that don't have the infrastructure of family? How can we create communities where, and the answer is that's like so much easier to do today than it's ever been in the past. We can literally build these with all these online tools. You don't even need to create a business. So these are the things, it's all about your imaginal skills, your ability to imagine what would I do if I had a small modular reactor in my neighborhood that's safe and provides unlimited energy almost permanently. What could I build with that? This is
Yeah,
the
and I think the other side of it too is just thinking about it pragmatically. I wrote a piece on this called "The Great Reallocation," which is these assets that are priced wherever they're priced at, and they change hands. They're going to land in a trust, an estate, a will, a probate, whatever. It's going to be one of those things. If you don't have a plan, the state has one for you, right?
right.
So they're going to land, and then they're going to get distributed to whoever the beneficiaries may or may not be. Let's say that you are not a only child and you're a Gen Xer. Okay. So now you have a business that mom and dad built for 30 years that is there and you don't want to run it. Maybe your sibling does, maybe the other one doesn't, but there's value in it.
Yeah.
Right. And so these things that get put on the block are going to have forced selling at a level that may or may not be priced in. Right. Because as much as we're talking about the shortages and the ability to mint new homes and do the things that are innovative, you also have this existing inventory of homes that are no
Yes.
longer that are too big, that mom and dad's down in a nursing facility, they're somewhere else, or they're gone, and they land and they're in a market I don't want to move to, and they're in a market I don't really want to manage a rental there. And one sibling needs the cash because kids are going to college, and the other one wants to hold it because it's got memories and special, but they can't really afford it. And like all of these things are going to converge over the next 5 to 10 years.
Mm.
And so there is this massive kind of signal to noise ratio of what does it mean? Well, it means that on a case by case basis, to your point earlier, where am I long purposefully? Where am I indirectionally long so that I can diversify? Where am I likely to receive or be administrating
Yeah.
asset transfer? Because you have some sense of it. You know what you might be administrating, even if you're not going to inherit it all.
Yeah.
And then look at all these dynamics and where can I invest myself and where can I create liquidity and cash flow sources and things like that. So I think you've
There's
covered so
another
much ground. So much ground. I mean, this is why they have to read your
There's
stuff.
another layer of this is also important, which is you have to understand who you are. So some people
Very
can
true.
be entrepreneurs because they can live with the check that doesn't arrive for 2 months after it was supposed to have arrived, right?
Right.
Some people cannot sleep. They will literally, like, end up hospitalized with the stress of being an entrepreneur. So understand who you are. Maybe you are meant to be part of someone else's team. And that's great that you know that and that's your thing. Other people, let's say, the business of taking an old house that's maybe, as you say, part of this process of an offloading, you go and you find a repossessed home and it will require a huge amount of work to get that home into saleable shape. But you say, I actually really like doing that. I like the painting and the home DIY, and I have some friends. We'll all do that. We'll make like a party out of it. Okay, you can do that. Someone else who doesn't have these skills, maybe that's not for them. So you got to understand not only what are you already long and what are you already short, you got to understand what am I capable of? What am I not capable of? And that's where I come back to the heartware thing is you should pick the things that truly make your heart sing. If it's fun, then you will probably be more focused, more diligent, better at it. And I've seen people create businesses out of crazy stuff like fishing because you like fishing and you figure out some way to sell tackle for fishing. Um, I remember and just to give you a quick example, during the COVID lockdown, uh, of course, everybody was ordering pizzas, right? Delivery pizza. Well, there was a company in London where I was based at the time, total startup. It was a bunch of guys who'd come from a financial market background and they decided to launch a pizza company. And you're like, do you guys even know anything about pizza? Yeah. They're up against Domino's, which is one of the world's most successful mega companies. And they're going to take them on nose to nose. And they did. And they had an unbelievable success. And here's what they did. First, all the ingredients were super high caliber. And so they were more expensive than a Domino's. But here's the so simple idea. They didn't put the toppings on top. They sent the pizza ready to put in the oven. And you got to design your pizza. So you could say, I want pepperoni and I want onion, but it became like a family fun thing to actually like make some kind of a picture on the pizza, like build a picture of the house or make funny animals, or it became like an amusing, fun family binding activity, not just a pizza. And this thing flew. And, in the end, I remember now the reason they did it, even though they came from financial markets, they owned pubs and the pubs all went out of business. And they were like, how are we going to save we're up the creek if these all fail. So they converted them into pizza delivery places, but they didn't have ovens, so they couldn't make them. So they're like, okay, we're going to just make as much of the pizza as needed to get it to the person's house. And then they bake them, they design them, they bake them. People loved it. It's become hugely successful. So we all have to think creatively. And this is what it is to be in financial markets. The era of armchair investing, it was never really there to begin with. We just got lucky for a while that things mainly went up.
Yeah, I think your hardware thing comes full circle because when I think about, knowing who they are, knowing who I am, knowing who you are, all that stuff, obviously that's beautifully simple and powerful advice. you can ask yourself a set of questions and you can get centered on that. Some are more risk takers, some are not. Some are comfortable in a job, some are a great number two, some are built to be a number one. Have never had the chance, and here's your chance.
Very
Okay,
much.
great. So that's what gets us moving. So you are the example of that because again, you didn't want to go into the same role as your father as a diplomat, but you kind of understood the speak, you understood the language, you had interesting access, you had, and then you kind of found money and you got interested in that, and then you learned that, and then what you figured out was that you got excited and you served the purpose and you had fun being the translator
Mm.
between Klingon and the Federation. And now you're just giving us a full circle back
Well,
to where should we go? So
I
I think it's a nice arc of this conversation
yeah.
where we
Well, I
started,
would
where we
go
landed.
further. I would go further. It's important for the audience. I also made some massive lateral leaps, some of which did not work. But for example, when after I had my daughter and I decided I can't be a mom and investment banker at the same time. There's just no way I can handle the time demands. So I'm not going to do it. So I converted the investment banks into my clients instead of being my employer. And that worked out really well to go back to your old employer. And I think this is about to happen to a lot of people.
It is. I
We're about
agree.
to have a great firing from the big corporations because they wrongly believe that AI agents can replace all these humans, and they're about to find out that the AI agents are not up to it yet. And I think I just saw a headline that some big companies rehiring all their engineers as they realize this is the case at a much higher fee. So, okay, when this happens, what do you do? So I made a decision as well that instead of just talking about the world economy, that I wanted to be part of building it. So I got involved with a friend who was launching a drone manufacturing company, and I learned a lot about robotics, automation, aviation, drones. And, this is like 2014. And people were like, what's a drone? And why do we need one? Like they had no idea so it was too early in that field. But even though that one didn't work, that got me into space because space is all about drones fundamentally. They're remote robotics. Okay, they may
Right.
not have a propeller, but it's the same concept. And that's gotten me deep into the space economy, the space as I call it. So this is the thing, if you pursue what's interesting, if
Yeah.
you stretch your boundaries and you say, "Well, I've been talking about this, but I could do it. How about that?" Then your learning curve, and this is what Warren Buffett means by invest in yourself, your own skills, your own experiences, your own capabilities. There is value in that. You just may not know what it is until you do it.
Yeah, and I've said this in similar ways. Like the things you and I get to own are trust, right? Because that's not going to be automated anytime soon. Context, taste, which is a way of saying curiosity, what I'm interested in. Human beings are uniquely programmed to be infinitely curious.
That's our
And
that's
we
our
could,
superpower.
and that is our superpower, and that is not going to stop.
How we
And
go.
if anything, it's going to accelerate because now we have this intelligent,
Yes.
artificial partner
Yes,
that is going to be more intelligent than we ever will be, but not more curious. It
that's
will
right.
take, and then the coordination. So the last piece of the orchestration of the coordination layer. So I want to say one thing too. I want to do the commercial and then and let you have the final word. The commercials are really short, guys. I think you're here. I see over 200 and some of you in the live. The
Amazing.
replay is going to be fantastic. Send us comments, please. Put comments in the replay.
Nice.
So publish as a article with a full feature on Dr. Pippa and a bunch of other things, takeaways from this, so that you can have that for replay or for just digesting, or even put it into your own agent and say, "Tell me what I should do about this," as it relates to that. For those who know how to do those kind of things, so that'll come out here in a couple of days. If you're listening to this now, please leave a comment, ask questions. We'd love to have her back. Subscribe. She's here with 2 hours of her time. She'll never get back talking to a total stranger that now is a mutual acquaintance and someone who knows a lot more about it than he did when he showed up. And I'm grateful for that. Best way you can thank her and thank me is subscribe to her channel and thank her for doing it. It's why the guests come and it's why I do these shows so that you can discover new people. If you haven't discovered me until today, I'd love to have you subscribe or follow if that fits. Last thing I want to say is one of the things that I do is I only work with subscribers or brand partners that I use, right? And I say that because Substack is a unique being that way. I know you have a a great subscriber list that's paid and free that you kind of are able to do the things and say the things you want to say without a corporate overlord.
Yeah.
I'm committed to that as well. A company that I've used personally and that I recommend to every company that starts or everybody that's in your shoes is called Pebble, Pebl. You can check them out at highpebl.ai. There's a special offer there if you're interested. But what they do is unique is in this world where we can work remote, we can live where we want to live and form a company elsewhere. We could have AI agents where we could have remote employees and we don't want to deal with jurisdictions. Like I live in California. I love the part of California I live in. I don't want anything here that doesn't have to be here.
Yes.
So I am here, I work here, and I compliantly have a job here,
Mm,
but I do not work for myself. I work for Pebble as an employer of record.
right.
And that allows my technology companies, which exist in other places, my financial advisory companies that exist in states like Texas and Wyoming, Colorado, and Arizona,
Yeah.
that allows them to have employees in other states,
Mm,
single line of record, and it allows it to hire Chris in California and pay him a W-2 and give him benefits and be completely compliant so that Chris can pay his taxes. It allows me to do those things without having to move Nexus for the rest of something into a
super
place I don't want
interesting.
to be.
Super
And you move
interesting.
and you move to Texas. And so for anybody who's interested in how an employer of record
Mm,
could be part of your architecture as you think about your nimble future, I can't encourage you enough to check out Pebble and learn more about them. Kelly Wake is a friend. I met her years ago. She's a subscriber. She's on here, but they have special discounts. So if you go to highpebble.ai, that's the podcast one. You'll get a discount that's not available anywhere else if you sign up for any of their services. That's the plug. That's the ad. But I use them, and I use them as part of our architecture for asset protection, for proper entity structuring, and so that I can live where I want to live and be
mhm.
happy, but not deal with jurisdictions on the entity side that I don't need to.
Yes.
And so if you want the best of both worlds, terms and conditions apply to their offer. I don't get involved in that. They do, but that is the plug. That's why this is a free episode. And thank you, Pippa. I'm going to give you the last word. What's the best thing that you have coming out on the Substack that they should be looking for in the feed? Because I know you're publishing some new thought pieces that you're probably excited about.
Well, first, I feel like I'm maybe one of the only optimistic economists in the entire world economy. Like they're all doom gloom and they're all pretty gray as well, as in like in gray suits. They have a very conventional approach in the main. But what I see is extraordinary innovation and problems are being solved at record speeds. And this is also causing the leaders of the superpower nations to begin to look at each other and say, do we really want to go to war? Because today's weapon systems are so powerful. There basically won't be anything left if the superpowers
Right.
try to have a direct conflict. So I think they've all gone, yeah, let's not do that. Let's go back to making money. And although it's a bumpy process, we are seeing signs of alignment. And I think that we are heading toward a peace dividend. And when this happens, the combination of tech innovation plus the loss of geopolitics as a problem, markets are really going to fly. And I think most people have been so focused on the downside risk, they're pretty well prepared for that. But most people are not at all prepared for what if everything gets better? And so they should start to think about this. What would happen if you moved into a home that had virtually free energy and pretty much free Wi Fi? And you can, as you just described, run businesses from anywhere you want with a global team because now geography is no obstacle. This is an incredible, I mean, no moment in history has ever offered this to all of us.
Yeah.
So we should think about the possibility of that upside.
Yeah, I think that's a good way to frame it. You know, we can be practically optimistic, and human history tells us that we're probably not done.
We're not done. No.
Well, thank you for spending some very human time in a
Oh,
conversation with me
yeah.
today. It's been an absolute treat, and thanks to all of you. I think we kept climbing throughout this, so you did a great job. 238 in live, that's awesome. Thank you guys, Omar. Thanks for your comments, questions. I didn't even get to all of them. Ask questions in the feed when you see the replay. It'll come out to my subscribers. It'll come out to Pippa. So just make sure you're in one or both of those silos. It'll come out for free. they'll put it behind a paywall. So
Okay.
you'll be able to comment on it as well. And we'll look to extend this conversation and keep following your work in the future. Thanks so much for being here, everybody.
Thank you.